offshore CSDs. The third one is to strengthen the RMB payment functions by more use of SIPs. Yeah, that's my suggestions.
Yes, certainly. I always have a question in my mind. Liquidity and products, everybody knows that it's important. Which is more important? Someone say that liquidity is important because you have liquidity in the market, then you can attract market players. But someone also say that, well, we need to have good products first. With good products, you have market players coming in, and then you have more liquidity. I just simply don't know. So I think the best way for us is to work on both. Okay, let's see what Annie, another speaker, whether you have any insight for us.
Thank you, Chairman. I think to answer your question, it's better to find a fine line between the open up and the stability. And from the market participant perspective, to me, I think especially this year, the low volatility, low beta, and relative stable quality feature will be one of the main reasons and drivings for the growth of the market. For example, in the old days when investors or RMB assets start to be attractive, there are a lot of reasons, but one of the reasons is because of its stable appreciation of the FX value, and also relatively stable and a high yield versus the other DM asset class, especially in the bond market. This year, the market has been experiencing a lot of uncertainties and challenges. We've seen that a lot of bond markets has been sold off quite dramatically, and the global bond aggregated index has been fell more than 15% in 1 year. However, the CNH denominated bond has been demonstrated its resilience among all the asset class. Its performance is fairly better than the others. So to me, I think as a whole, a relatively low beta and stability will become the drivers for the growth. Thank you.
Yeah, I couldn't agree anymore. Although we've seen quite significant bond outflow from the mainland market this year. And actually, it's not only from mainland China. That's a global phenomenon. Must say that it's still very resilient, and the long-term fundamentals of RMB assets still pretty good and sound. And given the low correlation between RMB assets and the rest of the world, and also the relatively stable currency in mainland China, at least from our point of view, it's still a pretty strong market and would be able to have the potential to attract inflows into this asset class again. It's just healthy. Money go in and go out. If we're only seeing money going in and not coming out, then that's something we should be concerned about. Let's see what our last speakers have to say on this question. Ding Chen.
Thanks, Chairman, and good morning, everyone. It's really a privilege to be here. And I will go to the key driver first. So Hong Kong, as an international financial center of China, enjoys full financial and trade autonomy under one country, two system. As China progressively opening up its capital markets to rest of the world, Hong Kong is still acting as a springboard to link up onshore and offshore investor in its fully prudent and robust capital markets. And it's because China is still ongoing this phase of opening up. There are unique opportunities only present in Hong Kong. Take the recent phenomenon in dim sum bond market as example. We're seeing a rush of RMB denominated bond issuance due to the fact that onshore RMB risks are higher than, offshore RMB risks are higher than onshore. The difference of cross-boundary rate attracts onshore buyers and offshore issuers to take advantage of Hong Kong's RMB bond market as a platform, while offshore issuers get access to onshore fundings and onshore buyers find more attractive return for their capitals. Of course, as China's economy and capital markets continue its pace to connecting with the world, and the trend of RMB internationalization progresses, there will be more opportunities for different type of product innovation and connectivities for Hong Kong's RMB market. Speaking of challenges, there are two I can think of. First, as an asset manager, we are always looking at supply and demand from the market. On the supply side, we see lots of RMB products to be introduced to the market, from dim sum bonds to Hong Kong domiciled products with underlying onshore assets. On the demand side, however, we feel it's relatively weak, especially coming from local institutions. Having said that, we are encouraged by MPFA's recent move to include onshore CGB and policy bank bonds into eligible investments by MPF after its inclusion of China A products last year. Given the close ties we have with mainland China, we hope to see RMB assets becoming a more mainstream asset class here. Secondly, I think Hong Kong is facing a big challenge with it, which is how to retain talent and attract offshore business partners to visit the town under zero COVID policies. Given the border control that has been going on for its 30 years, I truly hope that there can be some relief measures introduced soon to make Hong Kong a more competitive financial center. Thanks.
Okay, thank you, Ding Chun, for your very useful comments and insight on how we should sharpen our platform further. Some hurdles still lying ahead. Current control is one of them. I think all of us are here aware of all those issues and working hard to gradually remove them. So thank you all for sharing your views on the key growth engines for our offshore market. Talent, liquidity, and the greater diversity of products and issues are all important components. So let me now move on to discuss one specific segment of our offshore RMB market, and that is the dim sum bond market, and see whether we have all those important components in it. Now, actually, since the issuance of the first dim sum bond in 2007, the HKMA has been trying hard to develop it by bringing in more, quality issuers, like the Shenzhen municipal government that we've all seen last year, and also, more liquidity into the market, and therefore we've been working hard with PBOC. We've got the new swap line, and also riding on it, introduce some enhancement to our own RMB liquidity facility to all the banks. And I would here encourage actually all of you to use it without any concern, no stigma at all. This is only for the better development of your product and also ultimately the market itself. But that said, of course, the size and the depth of this market has yet to be expanded and to become more mature before it can fully function as an offshore RMB funding platform and asset pool. So from the buy-side perspective, how can the offshore RMB bond market be further expanded and deepened? Let me direct this question to Chen Ding first, as you are on the buy side.
Thanks, Chairman. I think it's a very valuable question. And diversification and create a sophisticated ecosystem, I think, are the key factors to expand and deepen the offshore RMB bond market from a asset manager point of view. We all know in the past, many international investors are looking for China credits due to the yield attractiveness. They are held back by accessibility, credibility, and tradability. Hong Kong has done a fantastic job to facilitate those client needs by developing the dim sum bond market, offshore US dollar bond market, and build up northbound bond connect. And right now, since climate rate in offshore market since getting different, onshore investors are looking for higher offshore RMB returns, and offshore issuers are looking for cheap RMB funding in Hong Kong. We all know that, mainland China has the second largest bond market with the size around 20 trillion US dollar. And the majority of the players are local investors. If even a small portion of those investors can, begin to diversify their portfolio through Southbound Bond Connect, it means a huge business opportunity for Hong Kong. And from this demand side, we can easily see the strong desire here. And on the supply side, if you all agree with me, it's the golden time to develop Hong Kong RMB market and help the country to internationalize its currency. We need to speed up to increase supply to capture these opportunities. And how can we do it? We should diversify the issuers first. We should bring both domestic and international issuers here, especially international issuers, to issue RMB denominated bond. The international issuers or credit names not only can diversify mainland investors' portfolio, provide higher return, but also have great potential to bring global asset owners to participate in Hong Kong RMB bond market through those names that they are already familiar with. By doing that, we can really create a sophisticated RMB bond ecosystem here. And talking about building a sophisticated ecosystem, CMU's reforming is the crucial part. Right now, the CMU platform is an ideal place for onshore and offshore investors to meet, each taking what they desire at a controlled and regulated manner. We should take this opportunity to develop it into a world-class platform, just like the Euroclear. Increase the variety of products that can be traded and settled. All in all, it will take a lot of commitment from all the stakeholders, issuers, arrangers, regulators, CMU, asset managers, to all come together to enrich the ecosystem and perform it to both to promote it to both onshore and offshore investors. When there are a good variety of products offered on the platform, I believe investors will be attracted and to participate in more. Thanks.
Thanks, Ding Chen, for painting such a rosy picture for us. I think all of us here would agree and like to see more international issuers coming to Hong Kong, making use of a platform to issue RMB bonds. That would be a very good illustration of RMB internationalization. And then I think this rosy picture is, is not unachievable. I mean, if you look at the high savings rate in mainland China, and investors also have a real need to diversify their assets. If we could expand the eligible investors range under the southbound channel of the Bond Connect, and then we could admit more real investors to make use of this platform, then supply and demand, if we have the demand, then there will be the supply. And we hope that sooner or later we can see a broader range of eligible investors able to use the southbound Bond Connect to invest into the Hong Kong bonds. Not only banks, but also asset managers and insurance company on the mainland side. They have real demand for all these sorts of things. Okay, when we talk about RMB bond market, I think all of us will not forget the Bond Connect. And with the launch of the southbound channel last year, the onshore and offshore RMB bond market actually are fully connected now. So how can we make better use of this southbound channel to promote the further development of the offshore RMB bond market in Hong Kong? We'd like to hear the insight of both Tony and Annie. Maybe Tony first.
Yeah. Last year, the Bond Connect Southbound is launched. That's a very important arrangement. I think it really makes the Bond Connect scheme perfect. Because 5 years ago, in 2017, we have the Northbound introducing foreign investors to invest onshore bond market through Hong Kong market. And but for the, we wait for a very long time to see the development of the dim sum market. I still remember that I've honored and to be involved in the first issuance of the offshore army bonds. At that time, due to we lack the interest-carrying army assets, so the offshore army bonds got the nickname, the dim sum. It's just like the dim sum here is delicious, but not enough. But 5 years later, or the years later, the market is still called dim sum market. It's still because the size is still like the dim sum, not big enough. So how to make that market proper and big enough, deep enough to serve the needs